Hello and welcome back to Altcoin Buzz. It's me, Jimbo, here for another market update. In today's video, we will have a look at Bitcoin, which broke out of its tightening range and has jumped 15% to the upside. We'll take a look and see where it's going to move next. We are going to have a look at the Dow Jones Index, and there is something I think is rather alarming on the 1 week chart. I want you guys to glance your eyes over it. Let me know what you think. It could be a pretty bad sign for the current state of the markets. And it may indicate we're not likely to see a recovery anytime soon, but you're going to have to stick around to check that out. We're also going to check out the hash rate chart and see what that's telling us about Bitcoin, because I think there's something quite important that we need to see on there and pay attention to. If you would like a chance to win a CryptoTag Zeus starter kit, make sure to be subscribed to Altcoin Buzz if you're not already, and leave a comment down below. We will select a random winner on Saturday and announce it then. Let's jump on into the charts. So we're going to start here on the weekly chart, which is probably showing us the most important signal of all on the charts at the moment, and that is that we are currently trading back above that weekly 200 moving average. And this candle here on my chart is lagging at the moment. We're actually about $6,200 as of time of recording, which is about there. So as you can see, we're trading quite a long way above that 200 weekly moving average. But remember, we're looking for the price action and the candle to close above the 200 weekly moving average, which means we need to sustain above 5,400, 5,500 at the end of Sunday. So that's the important thing to watch for. At the end of Sunday, we want to be above 5,500. And I'm going to quickly jump down now another time frame. We'll go down here to the 4 hour because I think this is where we're going to see the most interesting formations and the best way to scope out our targets, right? So you can see that we have broken out of the triangular tightening range. We were suggesting in the last video possible continuation symmetrical triangle, but the note was that you don't trade any pattern until you actually see it break out and confirmed, and this is exactly why. Because we got caught. You could have very easily got caught in all this noise, and there was absolutely no need to, because you could have waited. And clearly, this was a playable trade. That is, an increase in breakout at peak at about 14.5%, 14%. So, what I'm saying, as I've said before previously, I'm not a financial advisor, nor am I giving you financial advice. Of course, I'm just a guy on YouTube, calling the charts as I see them. And I do personally trade for myself, but we might have different risk and reward strategies. We might have different financial positions. Everything can be different, so don't take anything I'm saying as financial advice. It's just my opinion. But as you can see, we broke out of the range. We've gone up and we've tested that first resistance that we were looking at 6,500. Not quite made it all the way, but when I zoomed out a little bit further here on the 4 hour chart, I did notice that we did have a wick that dropped below here and helped to form us this purple line, which I believe will come back into play in the next couple of days. I don't delete any lines that I immediately think are going to be important in the near-term future, and I think that as my videos continue, you're going to see that, and you're going to see how these lines come back into play as we move forward in time. But you can see that we did have a drop down to this level of about 6,420 on December 18th, and that's exactly where we've come and been rejected. So we've entered this, we've tested this area of resistance for the first time. And a couple of things that I could potentially see playing out. One requires me to move down to the half an hour chart just to make it clear. This could be a potential bull flag formation. You can see we've got the run up and we've potentially got the flag forming at the moment. Need to keep an eye on this range. There's a chance that because this is the half an hour chart and this video might not be released for another couple of hours, it might have broken out of this pattern by the time this is out. So that'll be worth you guys having a look. This is going to be a key indication of which way we're moving. If we break to the upside, which it's fighting to do even now, fighting to try and break that to the upside even now, I would imagine we go on to test the 6,500 area immediately, and then of course we would then from there go on to the 7,300 range, which is absolutely critical for me at the moment. And I'll show you on the 1 day just why I think it's so important. That was our build up from the last bottom area back here in 2019 in February. You can see we had this support. This is going to be heavy resistance, but as I've said to you before, the heavier the resistance, if you break it, the more volatile the move is often, and that's the same with the support. The heavier the support, and the more support you've got there, if you break through it quickly, it tends to be even more volatile. So all of these resistances converging in this area is really interesting. It shows we've got a lot of pressure from above, but if we can break through it, and it's a long way away yet, that we've probably got a video between, at least one more update between now and that breakout if it was to happen. But the first thing we need to look for is break of 6,500. We get above that, the target that we set from the breakout of this triangle formation, then we are really looking rosy, and we can start to say this might be an actual bottom formed, and you know we see the price action start to turn really bullish again. But any rejection here, any sustained rejection here, would be obviously a rejection of that. And also, I'm going to add, we drag this line out further because I think this becomes a support now for us to watch. If we are rejected off the 6,500, then we may go on to retest either of these support lines. So we'll put those in place, and we will re-examine how they play out in the next video. Next up, we will dive into the Dow Jones. Here we are on the Dow Jones 1 week chart. I'm going to try and get through this quickly, so try and stick with me on this one, but I really think that we need to be viewing this. I know it's not a cryptocurrency, but this is going to have implications across all financial markets, and I think we need to have a look at this pattern that I'm seeing and analyse what exactly this means. I'd love to get your feedback in the comments below about what you think of this. I'm going to take us back in time quickly to 2008 to 2009, to our previous, the last substantial market recession that we saw, the 2008-2009 market recession. And here's how it impacted on the Dow Jones. And what I'm trying to point out to you here is that 518 days, 55% down, countless attempts to break the exponential moving average all the way down this. We've seen drops, so relief rallies, breakdown, another relief rally. Once you've rejected it again, you see accelerated sell-off and fear, but still we're seeing these days of retesting until finally we see this big V-shaped reversal pattern. You can see that big V-shaped reversal, and then we break up back above the exponential moving average ribbon and upwards all the way to 2018 with just a little bit of a pullback here in 2015. Okay, so you've seen how 2008 played out, 2008, 2009. Now let's use the same date and price range measuring tool, the same that we've done on the last recession. We put our high point before the drop, and we're going to go for our low point as of low we've gone so far. And so first thing you're going to see is that we're 36% down. So we haven't got anywhere near close to as far down as we dropped in the previous market recession back there in 2008. It was 56%, I believe, quickly from memory, 55.4%. So we're not quite that far down right now, but we are substantially further down for the time period. This is 35 days in comparison to that last market recession, which played out over the course of 520 days. Look at all these tests of this exponential moving average ribbon. Look at our ribbon in this occasion. It hasn't even fully crossed over to the downside yet. This is such an accelerated move to the downside. The ribbon hasn't even had a chance to catch up on the weekly. This is a completely different event to the 2008 and 2009 recession, and I think that is clear as day when you see those two sets of data compared against each other. This is a very different event, and how it plays out could end up being very differently as well. Imagine if this lasts 518 days, and we've already sawn 36% off in the first, under 40 days. This is completely unprecedented, and it doesn't look the same as that previous market recession. I think that's really important to bear in mind and keep an eye on. Without sounding all too doom and gloom, I'm going to show you that we've got this support area, which we did travel within this box for 800 days. So there's quite a lot of volume within this area. We're currently stuck above it. And if we have a look down onto the daily chart, you can see that we've got two elongated wicks on our two last daily closes. This is not me suggesting that this is immediately signs of a reversal and that we're going to find support above this box, because we've got these elongated closes on the daily all the way down here. So not enough evidence at all yet to suggest that this is the end and that we're not going to break into that box. But my key area to watch right now, from my perspective, is 18,700. I think that if we break down there, then we can anticipate at least some period of trading within this range of 15,500 and 18,500. So that's what I wanted to point out to you today on the Dow Jones. I'd love to let you see you guys put some comments down below onto what you think is going on here. Why are we seeing such a different event? I know that it's a different trigger point, but is that the reason that you think that we're seeing such a different event? Is it because we potentially see that economies could maybe come to a standstill as this virus really grips the world? Is that what it is? Do you think there's something else? Let me know. I really want to know. And to conclude today's video, we're going to jump over to the hash rate chart. I'm a strong believer that price isn't the only indicator of Bitcoin's strength, and I want to go and have a look on that chart and see what we can find out there about Bitcoin's current strength. Well, I don't think it takes a genius to see that the Bitcoin hash rate is currently in a downtrend. I personally believe that we're going to see this reverse fairly quickly. I think that seeing the price increase today, hopefully we'll see some of these people who have turned their miners off come back on. And I also like to add that there's all manner of reasons at the moment in the world why these miners might be off. So I'm not overly concerned by the current trend, even though I've suggested to you it's a show of Bitcoin's strength. It's not the only one. The price increasing should attract more miners back. And as the halving approaches, if we see more buying interest, then more miners will turn back on, is my personal opinion. And quickly, I wasn't going to, but let's just show you that Bitcoin Google Trends search continues to be on an uptrend at the moment. It's lost a little bit of its current steam that it had at the beginning, but it is still on the uptrend. So let's hope that that continues. And as we see more free money handed out across the US and any other country that decides to follow suit, and the interest rates continue to decline, and this world panic that we're seeing at the moment caused by the coronavirus situation, I think that we're going to see this interest in Bitcoin continue to increase. I mean, I wouldn't call myself a die-hard maximalist, but I do believe that having read the Bitcoin white paper and understanding it, that this is what a lot of people believe is the reason it's made, and why that Bitcoin exists. So it'll be interesting to see if we see that narrative begin to get stronger, especially now once we've seen the DJI chart, we've seen the Bitcoin chart, we're seeing that Bitcoin's pushing up, we're seeing that the Dow Jones looks like it's struggling at the moment. Are we going to see more people start looking at Bitcoin just because they start to see that it's moving upwards against everything? Perhaps that will work in our favour as Bitcoin holders. We will have to wait and see, and time will tell. Don't forget to leave a comment down below. Let me know what you think of today's video, and that'll give you a chance to win that crypto tag Zeus starter kit. Also, please slap a like on the video, because that really helps us get the content to more viewers. And I will be back on Saturday to update us once again. Until then, guys, take care. Bye.